Lo, good to see you. Why Adobe and Alphabet in particular? Is it really the cash flow part, or is there something else to it?
Yeah, well, look, John, first, thanks for having me. When we think about what's happening within the economy, just all of the different dials that are being turned, the geopolitical situation, which is so unfortunate, the inflationary environment, the interest rate hikes that are upcoming, just looking at commodity prices, looking at a flat yield curve, we really feel that that environment has really punished the stocks that are responsible for a lot of the growth, mainly those technology stocks. And so those are valued more looking ahead to their future earnings. And we feel now is the time to really focus in and start to pick certain stocks. I think back to your comment, John, about is it time to unbundle FANG? And I think what that really represents is we can't think of just tech as this group anymore. We really have to become selective. And so our selections are those companies that are really benefiting from solid, predictable growth as well as great cash flow. And two of those that do it really well are both Adobe and Alphabet.
A couple of things I think are interesting about those names are the way that they are approaching small business needs, right? Small business over the past couple of years has seen the need to go digital with an urgency that they hadn't before. Adobe's got a Shopify-like approach and lots of data. And, Alphabet's Google, similarly, not bogged down in a lot of this metaverse talk. Google was mapping the actual world and is able now to give insights into where people are gathering, where people are shopping, both in the real world, physical world, and digital. Is that valuable?
Oh, without question. I think those are two very good points to make that highlight, in particular, Adobe. I even like to think of Adobe not only serving small businesses, but think about individuals, the creator economy. Adobe arguably was the first pure play to be able to benefit from this trend of individuals beginning to create their own businesses around themselves, whether that be freelancing or whether that be influencers within social media, developing memes. I mean, that really is facilitated by Adobe. This is a $20 billion plus market that's growing at over 30% a year. And when we look at Adobe, great cash flow, you think about the fact that they've got a really clean balance sheet. They've got, almost $7 billion last year in free cash flow, and 90% of their revenue is recurring and extremely predictable. So we really like Adobe a lot for some of those reasons highlighted on your end. Same with Alphabet. Look, Alphabet having $140 billion in cash on the balance sheet, very little debt, being able to, even though they're the number 3 player in cloud, still be able to grow that business 45% year over year. That's massive.
Right, Lo, you're choosing sort of the larger, profitable, perhaps more safe names in this kind of environment, but with the 10-year yield touching 2.66 this morning, is it as simple as buy those names and sell the unprofitable, smaller ones? Or is there an opportunity to pick among them and perhaps find the next Amazon, so to speak?
Yeah, everyone's been looking at this, and Deidre, I like that point because, again, being extremely selective, I think, is going to be important. If we were to look at some of those names that have been, beaten up a little bit, those would be the higher growth stories, particularly around enterprise software. Within some of those names, we like companies like SentinelOne. We like even GitHub. We were really pleased to see the results that GitHub showed for this past quarter in their earnings report, just kind of really putting up some solid numbers, showing that GitHub doesn't really have, too much of a concentrated dependence on some of their larger enterprise companies, and that their freemium model of giving away the lower end version and then graduating people up is working. So we do like some of those businesses because when we look at the fundamentals, nothing has changed within the fundamentals. You look at the IT directors, they're still predicting strong spend on these types of services.
Just want to point out, you're meaning GitLab, right?
GitLab, excuse me. I might have said GitHub. Yes, thank you.